Hey there, my name is Carlson. I'm a mortgage broker here in Canada. If you've seen any of my videos before, you probably noticed that I'm not in my same location. Usually I shoot my videos in my home office, which is primarily where I work, but today is Saturday, March the 14th. I'm meeting with clients today, so I thought I'd bring my camera and shoot a quick video on some of the changes on this COVID-19. So this is my office here in Regina, Saskatchewan, where I meet with clients, and yes, we're still meeting with clients. So we're just being smart about it, being careful about transmission of this COVID-19 virus, washing hands lots, sterilizing all our work surfaces, and be sure that we're being careful with our clientele, and we're forgetting the handshakes for a little while. So just yesterday, the Bank of Canada did an emergency meeting of their kind of Bank of Canada to find out what they want to do with rates, and they cut rates. Just an emergency. They generally just do them certain times of the year. They did an emergency meeting yesterday and decided to cut rates like crazy. Now, just because there's a bit of a rate cut to the overnight rate doesn't mean that the prime lending rate or mortgage rates are going to tumble as well. We're already seeing, as of Friday the 13th, some of the lenders that we work with, like Scotiabank and First National Financial, they've actually decided to turn around. Some of the rates are going back the other way. They're actually, they decreased quite a bit over this last week, and they're actually inching them up just a bit more. So I think they decided that with some of these rates kind of heading into the darkness, that they're not going to follow, and they can't be giving people these insanely low rates in relation to what the Bank of Canada's prime rates are doing, because they're typically giving you 5-year fixed rates, and they know that that money isn't going to be that cheap for a very long time. So their economists are pointing them towards maybe inching the rates back up again and not following the Bank of Canada with these huge rate cuts to help stem some of the pain that's happening in the stock market. One thing that's happened with some of these new changes and with the Bank of Canada's announcement is that the April 6th changes to the stress test are ostensibly off the table right now. There's really not going to be a lot of changes happening in the mortgage industry, kind of as far as rules and guidelines, and especially the stress test. So that's kind of been called off right now. So not much changes when it comes to the stress test that they're already talking about, which I did a previous video on those changes. So the stress test rules that I put in that video, which I'll also link in the description, are basically they're not going to be reviewing them every week. It sounds like they're just going to continue as they have been. Current stress test rates 5.19%. If you don't know what the stress test is, then certainly go and have a look at that video on the stress test. I'll link it in the description below, and just talks a little bit about how to qualify for a mortgage under the stress testing and kind of what it means. And I mean, when you say 5.19%, people kind of get nervous. That's just a qualifying interest rate. We're still getting people excellent rates these days, but the 5.19% is what you have to qualify at. Now, I also want to talk to those people that have current mortgages right now that might be affected by the COVID-19 virus at their employment, and your income might be affected by what's going on right now. If that is the case, get in touch with your bank or your mortgage lender right away and let them know there might be an income interruption in your household and mortgage payments might need to be delayed. If that is the case, most of the banks in Canada are on alert for that sort of thing, and they want to work with you. They want to make sure that you're able to miss a payment if you need to, if it's necessary, and to make sure that you keep going with your mortgage. They do not want your house back. They're not going to foreclose on a Canadian in the next few weeks just because of COVID-19. This is kind of unprecedented. These are some pretty amazing financial times, some for good, some for bad, and we just have to roll with the punches. Another thing I'm going to recommend is, yes, if you're sick, stay home. Absolutely stay home. Do not spread this virus. That's the best way that we can fight this. We're just lucky as Canadians that we've had plenty of lead time, that this happened halfway around the world, and we haven't been as affected. As of today, the virus is here in Saskatchewan. We've got 2 potentially, and so we're not really in that bad a shape yet, but it certainly could be. So just make sure you're being safe and staying home if you think that you might be sick, and self-quarantining, certainly if you've been traveling. Another thing I'm going to recommend is, if you've got investments, I'm not a financial advisor, don't liquidate your investments. The stock market might be down. It is buy low, sell high, not sell low. get in touch with your financial advisor. There might be some opportunity for you to move some investments around into something that is going to bring some marketability into your investments. Oil prices are down. Find investments into good, solid, long trending oil companies. Invest in oil. Oil prices are way down. This is a terrific time to buy into that sort of thing when prices have fallen like crazy. When it comes to my clientele, any clients that I have here in Saskatchewan, if they do have an interest rate over 3%, yes, I'm absolutely getting in touch with them right now to look to get them into lower interest rates. However, my game plan, and probably any mortgage broker worth their salt that's been in the game as long as I have, is this is a long game. This is not something where you want to be just jumping into the next best interest rate immediately right away. You know, things can change. So I firmly believe that for the next little while, all of us mortgage brokers will be securing really low rates for our clients and maybe waiting a little bit if a client might have a penalty to maybe manage that. So the next few weeks and months is certainly going to be busy for all of us in the mortgage lending industry. But just be mindful that we've got lots of clientele on the go already, and we certainly will do our best to help all of our clients. I know if you've seen any of my other videos, I've said that if you are looking for mortgage financing anywhere in Canada, I'd be more than happy to help you. Well, right now, that's certainly not the case. If you live in Saskatchewan, so if you are looking to purchase a home in Saskatchewan, if you're looking for a mortgage, looking to refinance or get a better interest rate, absolutely happy to help anybody in Saskatchewan. As of right now, for the foreseeable next few weeks and months, I won't be taking on any clientele from any other provinces within Canada. I'm going to be focusing just on the people within my own province for now. If you're looking to purchase a home, absolutely. If you live in Saskatchewan, I'd be more than happy to help you. Contact me through my website, which I always link in my descriptions below, and I'd be more than happy to make time to meet with you in person or do everything over the phone. So if I've got clients that are nervous about meeting in person, absolutely. I work from a home office primarily, but this is my meeting place for all my clientele who want to meet in person here in Regina, Saskatchewan. And I'm always happy to meet with people. But if you're nervous about meeting in person, by all means, happy to do everything over email and phone calls, and that's certainly not a problem.